Hi and welcome to today's episode on Tor options. For you guys who don't know me, my name is Tor and I like to write puts. Today's topic is dividend investing and why I'm not really a fan of it. But first, the first week of 2021 have been crazy. It's been like a season finale of 2020 essentially. But with all the political risk away now, the market looks to appreciate it, and given the blue wave that we got from the Georgia runoff election, it's sort of the market is expecting larger and bigger stimulus deals in the future. We had jobless claims this week that beats expectation and are continuing to climb down. And yesterday, on Friday, non-farm payrolls for December showed that 1. Unemployment rate is unchanged at 6.7%. The US lost 140k jobs in December, but it was also the first month of decline in 8 months. And as we sort of knew from before, it was leisure and hospitality that declined the most. This was probably due to increased government intervention, aka shutdowns in different states, I believe. But this essentially confirms the picture that we've seen recently based on other reports, which means that the job market, it's sort of it's losing the growth that it had from the previous month. It's sort of stagnation. But this is very bad for the economy and Main Street, but the stock market went up yesterday. And this is sort of odd if you think first of it, but in my opinion, given that the Democrats control the Senate, Congress, and has a president, it raises hope for even bigger relief package in the future. And this is quite obvious, given that we see, given one, Democrats are very for a bigger relief package in the first place, and number two, they see that the job market is sort of slowing down now. Then hence probably will go even with a bigger package than before. So I think that the market is looking forward on this and are pricing in a larger stimulus deals in the future. So this is sort of just a macroeconomic overview from this week, but let's talk about me and my portfolio. So far, I'm up 3% this week, and the market is up 1.8%, so I'm pretty satisfied with that. Very. But given we have not a bull market, but given that the market went up this week, it's quite easy to earn money on selling puts, which I do. VIX is still above 20, which is historically high, but I believe given all the political risk is essentially zero now, it's essentially just a vaccine distribution or a mutation of the virus that can make the VIX great again. But who knows, it's just my viewpoint on it. So this was just an introduction, and now let's move over to the main topic of today, which is dividend investing. For you guys who don't know what dividend is and essentially the process of it, I will first briefly describe it. Dividend is essentially a distribution of some of a company earnings to its shareholders, which is determined by the board of directors in that company. It can either be paid out as cash or additional stock. But we will talk about cash dividends, and we will also talk about companies that regularly pays out dividend to its shareholders, and we won't talk about real estate investment trust. That's because for these companies or REITs, as they're called, dividend is sort of engraved into their firm structure. So it's not really a fair comparison between a normal company and a real estate investment trust. So the process of distribution dividend from a company is as follows. First, the company declares they are paying out dividend. This is called the dividend declaration date. Second, the company decides which shareholders will receive a dividend. This means that shareholders needs to own shares in that company before X date. And this X date is, for instance, 10th of December. So if you own shares before 10th of December, then you are eligible for a dividend payment, the next dividend payment, bear in mind. So now we have figured out which shareholders are eligible for a dividend payment, the next one. And so now the firm looks into their records and determines who will receive dividend. And this is pretty straightforward process. If you own shares before X dividend date, then you are eligible for a dividend. And at last, we have the payment date, which is actually when the dividend is paid out to its shareholder. So, dividend sounds pretty sexy, doesn't it? Yeah, you own some shares of a company and receive it in cash for it. Sounds heaven. Like, who doesn't want to retire just based on that? Like, you own enough shares in a company and you just live off the dividend. But it's too good to be true in my opinion. Like, it's no problem with dividend itself. It's better that the company distribute it to the shareholders than just have it in the firm. I agree, because they can waste it on unprofitable project, for instance. But it's a reason why they pay out dividend in the first place. And that's because it's not that much growth potential anymore in that company. It can be because of the sector they are in. And hence, if something extraordinary happen in that sector or market, etc., that can make that stock plunge, because one, the profit will plunge, and number two, just to make that firm survive, it needs to cut its dividend. And hence, you know now that given that the firm is sort of laying with a broken back essentially, and it's a very little growth potential in the future to make that firm recover. Like in the future, when we talk about future, it can be like 5-10 years. Like, it's very little potential, so the firm can like climb to previous all-time highs. And the only reason why you invested in that firm is because of the dividend you receive. But now you don't receive it anymore because it needs some money just to survive, right? As all firms does. But one problem with these stocks is that given that they don't have a lot of potential in the future, it is essentially they cannot invest in any more profitable project in those situations to increase the shareholder values, right? So, in my opinion on this matter, I would rather invest in a firm that has a lot of growth potential rather than just a dividend whore, essentially. Because I know with a stock that has a lot of growth potential, it can be a small, medium, large cap stock whatsoever. Just that I know it has a lot of growth potential. I know that in the future, or I don't know, but I assume that in the future, the price that it trades for now will be much higher. That price in the future will be much higher than it is now. So then I would rather invest in those firms because I know at least in the future I can get some capital appreciation on my money. That's sort of my viewpoint on this. Like, these dividend stocks, they're not that safe, and if something extraordinary happen in that business they are in, it can lay with a broken back for years and maybe never recover in the first place. Maybe a little bit, but not really everything that it lost in the first place. And the dividend in the future will also be less than it originally was because it received less profit. Or not that it received less profit, but the profit is essentially very low compared to the previous years. So this is sort of my opinion on dividend investing. But bear in mind, I'm not against dividend itself. I'm for it. Like, it's better that a company pays out dividend than waste it on unprofitable project. I said that in the introduction, but I am against this part in finance, or not finance, but financial strategies, which is called dividend investing. It is very many hidden risks in this strategy, and one of them can be that something extraordinary happen in that sector business that can essentially mean or leads to that company doesn't pay out as much dividend as it usually did when you invested in it just to get that dividend. And this is sort of my viewpoint on dividend investing. It's not a hidden gem. It's a strategy that sounds too good to be true, that has a lot of hidden flaws within it. This was it for today's episode, and until next time, happy trading!